Ray Enterprise had sales of 50K in March and 60K in April. Forecast sales for May, June, and July are 70K, 80K, and 100K, respectively. The firm has a cash balance of 5K on May 1st and wishes to maintain a minimum cash balance of 5K. Other data collected during the financial planning process include 20% of the firm's sales are for cash, 60% are collected in the next month, and the remaining 20% are collected in the second month following sales. The firms received other income of $2,000 per month. The firm's actual or expected purchases, all made for cash, are 50K, 70K, and 80K for the months of May through July respectively. Rental is $3,000 per month. Wages and salaries are 10% of the previous month's sales. Cash dividends of $3,000 will be paid in June. Payment of principal and interest of $4,000 is due in June. A cash purchase of equipment costing $6,000 is scheduled in July. Taxes of $6,000 are due in June. Prepare the following for Gray Enterprises for the months of May, June, and July. Projected cash receipts, projected cash disbursements, cash budget. Any questions so far? Question states, Gray Enterprises had sales of 50K in March and 60K in April. The question states, forecast sales for May, June, and July are 70K, 80K, and 100K respectively. Cash sales 20%. The question, point 1, states that 20% of the firm's sales are for cash. 20% times 50 is 10,000. So 10,000 out of the 50% sales are collected cash immediately. 20% times 60 gives you 12K. 20% times 70K gives you 14K. 20% times 80 gives you 16K. 20% times 100K gives you 20K. Lag 1 month, 60%. Refer to point 1. 60% of the sales will be collected 1 month later. So 60% times 60K will be 36K. So 60% of April's 60% of the April's sales will be collected in May, 1 month later. This concept applies the same for the rest. 60% times 70K gives you 42K. 60% times 80K gives you 48K. Lag 2 months, 20%. Refer to point 1 of the question. So 20% of the sales will be collected 2 months later. I highlight again, cash will be collected 2 months later. 20% times 50K gives you 10K. So 20% of March sales will be collected in May, 2 months later. 20% times 60K gives you 12K. 20% times 70K gives you 14K. Other income. Refer to point 2 of the question. The firm receives other income of 2,000 per month. So it will be 2,000 per month from May to July. Let us find the total cash receipts. Add up all these figures in May, gives you 62K. This is the total cash receipts in May. Add up all these figures in June, gives you 72K. This is the total cash receipts in June. Add up all these figures in July, gives you 84K. This is the total cash receipts in July. Please spend a moment to look at this part of the answer. Question point 3. The firm's actual or expected purchases all made for cash are 50,000, 70,000, and 80,000 for the months of May through July, respectively. Purchases. Point number 4. Rental is 3,000 per month. So it's 3,000 per month. Question point 5. Wages and salaries are 10% of the previous month's sales. This is the previous month's sales. Wages and salary. In the month of May, 10% times 60K give you 6,000. 10% times 70K give you 7K. 10% times 80K gives you 8K. Question point 6. Cash dividends of 3,000 will be paid in June. Dividends 3,000 in June. Question point 7. Payment of principal and interest of 4,000 is due in June. Principal and interest 4,000 in June. Question point 8. A cash purchase of equipment costing 6,000 is scheduled in July. Purchase of new equipment 6,000 in July. Question point 9. Taxes of 6,000 are due in June. Taxes 6,000 in June. Please spend a moment to look at this part of the answer. Let us find the total cash disbursement. Add up all the figures in May, gives you 59K. This is the total cash disbursement in May. Add up all the figures in June, gives you 93K. This is the total cash disbursement in June. Add up all the figures in July, gives you 97K. This is the total cash disbursement in July. Please spend a moment to look at this part of the answer. Total cash receipts. You can copy these figures from the last row of table 1. Total cash disbursement. You can copy these figures from the last row of table 2. Net cash flows. Total cash receipts minus total cash disbursements gives you net cash flow. So for 62K minus 59K gives you 3K. 72K minus 93K gives you negative 21K. 84K minus 97K gives you negative 13K. At beginning cash. 5,000 is given in the question. The firm has a cash balance of 5,000 on May 1st. Ending cash. Net cash flow plus beginning cash gives you ending cash. 3K plus 5K gives you 8K. 8K is copied to the next year beginning cash, 8,000. So which means that the ending cash in May will be the beginning cash in June. So it's the same concept applies here to the subsequent months. The ending cash of previous month will be the beginning cash of current month. Negative 21 plus 8 gives you negative 13K. Let's move on to the next year, beginning cash. Negative 13 plus negative 13 gives you negative 26K. Question states, the firm wishes to maintain a minimum cash balance of 5,000. Less minimum cash balance, negative 5,000. The formula for the last row is ending cash minus minimum cash balance equals to negative required financing or positive excess cash balance. 8K minus 5K gives you a positive 3K. Positive 3K indicates excess cash balance. Ending cash balance is greater than the minimum cash balance, which results in excess cash balance. In the month of June, negative 13K minus 5K gives you a negative 18,000. Negative value indicates required total financing. The ending cash balance is lesser than the minimum cash balance, which results in required total financing. In the month of July, negative 26k minus 5k gives you negative 31k. Negative value indicates required total financing. The ending cash balance is less than the minimum cash balance. That results in required total financing. Please spend a moment to look at this part of the answer. Comment on how the bottom two lines of the cash budget can be used to plan for the firm's short-term borrowing and investment requirements. If there is a requirement for financing, for example, June and July, the firm would need to borrow short-term, such as establishing a credit line of at least 31,000. If there is excess cash in May, it can be invested in a liquid short-term asset such as marketable securities. Any questions so far?